Master students to this is going to be 0 week 3-1 introduction to psychology. And what we're going to touch on here is actually that itself, right? A lot of the times people misconstrue the psychology thing with some very simplistic terms like we have to change our mindsets, right? We have to change our well, those things are true, right? They are true, sure, they are true, right? But those are also things that you can find on YouTube University anywhere, you know. So yeah, we could add more color to our meals, and we could also understand that being in the suck is an absolute must in order for us to continue, to thrive. Right, we must be comfortable in the unfortunate situations, right? All of those things, yes, of course. You can find them. You can find them on YouTube. You can find them on all kinds of different motivational speakers and all that stuff, right? But psychology within the trade, that is a beast on its own, a separate beast all on itself, right? You want to boop the snoot? And you know what? I think the psychology within the trade is absolutely something that's incredibly vast, right? I guess I can share with you that as far as the psychology, we also have to be psychologists as well, and we can say mass psychologists, because if we experience or observe price action on any, this is your S&P 500 index, all these valleys, right? All these valleys to the downside and then mountains to the upside, endless variable in price action. Well, those things mean something, and oftentimes we're able to determine or title them something, right? So, I mean, for example, this formation here. Let me get a trend line. Yeah, for example, this here. You're going to notice that it has very nice confluent touches, and this is your traditional descending broadening wedge. All right, so the descending broadening wedge started becoming a bullish formation somewhere in November of 2021. Right in here. This formation started to display upside because it used to be downside. So for what reason why was there a sentiment change on that? Well, it's like you can think of it like trending music or trending styles, clothing, or like entertainment. It's seasonal, and one moment it's in and the other moment it's not. And this is something that happens very often in the markets. So just like we track our if we do, right, just like we track our favorite artists or favorite clothing designers, if should there be any, we also track these things within formations in trading, because in case we are not noticing the changes here live, we could get really trapped. So yeah, psychology here for this formation reads anxiety. So this would be a descending broadening wedge, and it displays anxiety for both the descending version, the right-angled, and the right-angled ascending and descending, and also the ascending. So remember that there are 4 variables of this formation itself. 5. And they all represent anxiety. The expanding, the convergence, the bullhorn, right? That's what gives it away. Now, within formations like cup and handles and things like that, inverse head and shoulders, all those, they represent greed. They represent greed. And of course, we have fear with a traditional head and shoulders. we have fear that we have reached the top. There could be further continuation towards the downside. So these are basic things, psychological things that we can pay attention to within the trade. Because one of the more popular formations is actually just a candle structure, and that candle structure happens very often. I mean, super often. This is the weekly time frame of the SPX, and this is your bearish engulfing here. Right? Red bar above the prior green bar, continuation to the downside. Here's another bearish engulfing here, right? Red bar engulfing the prior green, downside. Red bar engulfing the prior green, downside. And here's another one, right? And downside. So you're going to start seeing that this formation here kind of rhymes a lot. And bearish engulfing, downside, right? It is a notable formation, and it does show a lot. It has validity. Here's another one here, and as you scroll, you're going to likely see them everywhere, right? So they happen all the time, and this is some way that we can be able to use, for our probabilities for downside. We can use that to determine price action. Here's another one here, right? And then you would then start to think to yourself, holy crap, well, is there psychology behind the opening of one? So then you would start backtesting. How often do they happen? When do they happen? What days do they happen? Right. So, for example, this would be the end of March, beginning of April. This is the beginning of July to mid-July. This right here is the end of July. Yeah, this is both the end of July here. What about this one here? Okay, that's a little bit of a weird one there. This is October, mid-October. And just doing things like this, you'd be able to see, and this is September as well. So yeah, if there's any rhyming within the days that it's doing it, if there's any rhyming within the span that they're doing it, right? So the space between this, bearish engulfing to the space to the next one. Those are all things that you want to observe, right? As a trader. And then you would have data for everything that you've looked at, right? So this would be your next one here. It's about 172 bars. This is 268 bars. Potential bearish engulfing at this area here, which means you can pair it to this area here. That's about 126 bars, and you continue, right? You just continue. You try to find it. You just try to find it. Because what I'm really trying to explain to you here is that the psychology is so vast to the point to where that you can make your own psychological probabilities over the immense amount of variable available in the market. It's so dense, it's so thick that you can literally create some type of strategy or some type of criteria that no one has really thought about, and for some reason shows you a great strike rate, right? Now, Kat is, I'm so sorry. Fox is asking me, can broadening wedges also be an upside channel as well? And if they broaden during an uptrend, is that a sign of weakness? Yeah. So that's part of the 5 variations of a broadening wedge. So you have, just to be clear, right? Just to show you real quick, this is going to be your symmetrical broadening wedge. You have your right angled ascending broadening wedge, right? You have your right angled descending broadening wedge, right? You have your descending broadening wedge, just like the one that we have down here. And you also have your ascending broadening wedge as well. So you have 1, 2, 3, 4, and 5 variations of the same formation in different formats. So yeah, and then they all have their price objectives as well. So very good stuff. Yeah, it does signal weakness, and oftentimes you can find a target. The take profit target or the price objective would be the genesis of the formation at the bottom side. That would be your take profit. Just like we were speaking on, let me get rid of this. The psychological belief of the of the take profit for this formation here would actually be the top side, right about this point here. And as we look back in time, you'll likely see that this resisted probably, perfectly somewhere, right? And there it is, with a pullback too. All right, so you can see here just how valid these things would be. Not only did we reach that high before, but it's just typically speaking, this is just how the cookie crumbles within this formation. And I will say that it has an outstanding hit rate. It typically works more than normal. Okay, so yeah, going back to the measuring of iterations. This would be an amazing thing for us to an amazing set of data collections that it would be best for us, right? So you would have one folder that's called the SPX, and then or the SPX stats, right? So inside of that SPX stats, you would have a bearish engulfing, one folder, and inside of that bearish engulfing, you'll have a hourly bearish engulfing, or hourly BE. Bi-hourly BE, 4-hour BE, 8-hour BE, 12-hour BE, daily by daily, 3-day, potentially 5-day and weekly, bi-weekly and monthly, and each with a data set, right? And then you'll have another folder, right? So that's just your bearish engulfing folder. You'll have another folder that says inverted head and shoulders. So the inverted head and shoulders you'll have also in different time frames too. So you choose them, right? You can choose to only do an hourly, 4-hour, 8-hour, potentially daily, 3-day, weekly, because remember that you can see the formations when you're talking about a cluster of candles like an inverse head and shoulders. Opposed to other formations, you could actually see that inverted head and shoulders through the eyes of many time frames. It just depends on which one you're actually playing. So that's why I'm saying that you could probably skip a bunch of time frames using the inverted head and shoulders, the regular head and shoulders, even your bull pennants or bear pennants, which are the right angled triangles, ascending triangles as well. Anything that's not two candles, you know what I mean? That's you can measure it with skipping time, because you'd probably be able to see it in different time frames, overall. And within those folders, you would also have the success rate versus the fail rate. And in this case here, the SPX definitely, has a bearish engulfing here, and it actually failed. It did not go down, right? It continued towards the upside, which means it just completely ignored the fact that it had this bearish engulfing. It was a bear trap, So these things we need to know of, right? We need to know of. And it would be good to collect data for any ticker that we decide to choose. Imagine the amount of probabilities that you can have set around any situation that happens mostly or very commonly within this ticker of whatever time frame. Imagine you have those probabilities always ready to go. Is that you'll know the implied moves, you'll know how often it happened, how often it succeeded. Even if you have a bearish engulfing, you can do. How many times did it retrace to the 50% of the prior red bar of the bearish engulfing, right, as a set of data? You can also put what was the average decline on the next hourly candle or whatever time frame you're in. So what was that decline every time it happens? So then create an average over that. There are so many things, guys. There are so many things that you can do. Or how about buy formations? So you do have an inverted head and shoulders, right? And you have its percentages already, and you see you have the different time frames too. Now, how valid is the inverse head and shoulders when it's set within a buy formation? Does it have a better strike rate or a lesser strike rate? So yeah, what I'm talking about here, team, is really trying to allocate and create an organized set of data, right? A set of data sheets for you. And if you know, I know it sounds like a lot, but if you think about the jobs that you work for or the companies that you observe, they have an immense amount of data drives, right, collected. all kinds of data is always being collected on these huge companies. So if you are noticing that that company is collecting, or whatever company it is, right, they're collecting data at that magnitude, then how are you not collecting data here? And that being said, psychologically speaking, personally, we should be treating this as a business. Of course, we want to make sure that we can have fun within it, right, and use the strategies of maybe not overthinking and not over leveraging, right, making sure that we can respect the process first before we execute and all that good stuff, right? So we would do things like that to gain a deeper edge, right? So yeah, just imagine you had all those time frames of different back tests and different scenarios, and imagine that you are able to set, or you would be, you would try for yourself to try to set that data from this one ticker that you're trading. Like you would set that data for for every ticker. So every ticker would have your bearish engulfing. Every ticker would have your inverse head and shoulders. Why? Every ticker would have that because those are the things that you typically look for. So while you expand your system and while you expand your knowledge base and your tools, then you could be collecting the data that from the things that you know so far. Right, so you would collect that data here, and you would just collect it, allocate it, archive it, and leave it there on a spreadsheet or whatever it is for the next time anything like that happens again. And then if it just so happens to happen in one of the other tickers that you trade, well, you're always looking, right? You're always checking. So there are ways to do this. There are ways to become completely. What I'm talking about here is optimizing your system, right? And what I mean by system doesn't mean it has to be digital. It does not have to be something that's made by a computer, right? What I'm saying here is that your system should be written down by hand, and you're going to learn your system little by little. And as you learn it, you will be making this checklist over whatever it is that you're going to trade. And does it have the criteria that you like, right? Is it the right float? Is it the right right market cap? Because that's going to display to you different volatilities, right? So you're going to notice that one of them has a lot higher volatility because it's a lot heavier, maybe a little more expensive. So you're not comfortable in that area. So you're going to try mid caps. And then within the mid caps, you'll be able to identify what size of a mid cap you would really like to trade. So, and the way you know that is by observing the ATR, the average true range, on a daily basis. The typical day trader likes to trade something that moves at least 90 cents any day that the asset trades, whatever asset it is that he or she is trading. Okay, so that's something to kind of go off there. So yeah, just remember that criteria, right? Remember, you would have an SPX folder. Inside of that folder, you can create. You can do even further, right? In that folder, you can create something that's called statistics, something that's technical, something that's psychological, and then something that's fundamental, all pertaining to the one ticker. So fundamental, inside you have your 10Ks. And how did they react to how did the price action react upon the release of those 10Ks historically? Right, and then you would have, and then so on, right? 10Ks, 8Ks, 13Gs, 13F filings. You would have share buybacks, forced share recalls. You would have dilution, right? You would have things of like management change. That maybe that's a little rare, right? But those are all things that you can kind of track, right? In order for you to gain a deeper edge towards trading whatever it is that you like trading. Right? There's often people telling you that they can make their career off of one ticker. And yeah, I guess it may be possible, but you would really be relying on its volatility always. So what if it's not really trading and you're just noting that the entire other world, right, outside of this one ticker is rallying towards the upside, and you don't have any data allocated for those other tickers? So you would choose the way that you would choose this would be to use sectors, right? So within the NDX, you would obviously choose tickers that technology tickers, right? So you would choose something like Nvidia, and if you want to choose something comparable to Nvidia, then you would go towards your either AMD or something else, right? Maybe ARM. So this way you have a small cap and a mega cap. Who knows? But that would be up to you, and how you are able to allocate your data and collect it. And it doesn't have to be every single ticker ever. Okay, it just has to be the ones that you really choose to do. And as you observe this, as you backtest it, you will be able to see other tickers react similarly to this. Because then when you pull out a couple tickers from every sector, you're going to be able to see the behavior of that sector through the eyes of maybe one or two tickers, maybe three. So you're going to be able to catch potential downside. So something that's running against the IWM, you'll notice weakness on the existing stock. If it isn't that it ran like crazy due to news or something, right? You would just observe it as a typical pullback, as a typical area of correction. And then you'll get displayed the weakness of the entire market through the eyes of just one or two tickers. So psychology inside of trading works with several different things. Psychology within trading can also work without us even knowing. Well, using Fibonacci retracement, we could see how the mass majority behaves when it comes to retracing towards a 272 ratio or a 618 ratio. Humans do that. Humans do that just because that's typical, that's built within our nature, and we do that. So we have a fixed type of psychology. Now, if we want to observe variable psychology, you would be using something like formation analysis and also fractal analysis, which takes us to our next step, right? So it would be through the means of like XRP, right? So XRP here on a monthly time frame does have repeating cycles here. So this would be the one phase, right? This entire triangle, and this would be the other phase, this entire triangle. Now notice how they are different in time, right? This means what I'm saying here is that they're completely, it's completely larger. But it's not larger to the point that where it's random, because things don't really work like that in the markets. There's no, I guess when it comes to predatory type of buying and selling, then sure, yeah, there is randomness to it. But to something that's just like the XRP asset, I don't really see there being too much randomness in this, right? So this is behaving in a specific way. So this is taking here your entire phase and noticing that is pretty much the same exact size of the first half of the second phase. Now, if we apply it over to here, then shit, it looks like it also rhymes pretty nicely within this place too, right? And they all kind of lead just to the very end before we get this massive upside, right? So that's pretty insane, man. That is pretty insane. The fact that these three iterations measure exactly the same and they all have upsides exactly where they should have upsides. And the upsides are not random, right? The upsides are anything but random here, because it's powerful enough to identify that if you remember here, the 1, 2, 3, right? Your third repetition here, your third rep, that would actually give you 1, 2, and 3. That would give you a 780%. And observing here as another 1, 2, 3, so 1, 2, and potentially 3 right here, right? So because it's a larger one, that gives you 808%. So it is rhyming. They're completely rhyming. Now, the reason there's a 7,269% there, and also right up here, the reason why there's that there is because that's what happened at the end of this phase. So we just measure that top, right? And then what if we took the Fibonacci ratio from this number 3 iteration here, right? So if we took the opening and closing basis fib to the maybe the wick low before it made that top side, then we could observe that the take profit area for this or the triangle's take profit would have been located right about what is that right there? Yeah, man, that's the 2.618. Yeah, the 2.618 located right at about 40 cents, 44 cents. So that leads to even more curiosity because if we are guiding this right, that 34 cents, we this is the pullback that I experienced here and the consolidation phase that it did just not too long after. So that consolidation phase led to what's kind of like a bull flag, and then takeoff to where it went to a 3.618. So if I measure this phase here, the 800% over here as an 800%, then let's see if the 7,269% upside to this almost the top, let's see what it does for us, right? So 7,269% would lead towards, well, what do you know? 2.618, just like it did here. So more rhymes, right? So and now we're looking here that price action kind of declined, and then it started to increase, and it started to increase, right? And it just did its little thing. So that's doing pretty good. We're able to see behaviors here. That's just what I'm trying to say. And what gave it away, what gave this the distances away, is actually this here. So we're talking about every phase being this first complete phase was 1,280 days. The second phase, right? The first half of the second phase was 1,250 days. And the the second half of the third phase would be around 1,338%. So you can see how they absolutely rhyme. And having that data right under the price action that I had just here is actually indicating a potential continuation towards the upside at the very tip and end of that formation. So that all is leading towards fractal analysis, right? So fractal analysis is something that a lot of traders like to look for, right? Because they want only the psychological reason for this thing to move towards an upside or to their preference in direction, right? So that's just absurd. Like, why would you consider just one? Yeah, why would you consider just one variable here for your analysis? That's incredibly incorrect, and I will say that I think it's really amateurish to do things like that. So in my experience, the deeper you dive, the better, right? And you guys kind of already know too, right, that this there are divergent drives on the momentum versus price action. So this area for the white zone, right, that creates a lower low zone, while price action creates to this point here, it creates a higher point. So that's an inversion that you have there, right? So and it's okay, team. That's just how the cookie kind of crumbles, right? So literal downturn here on RSI. When you measure divergences, you always want to use RSI. Don't use anything else. You want to keep yourself within the RSI for divergent drives. And magically speaking, the first phase also has that RSI metric as well, but we would have to use something more clever than that. Since we are lacking space and I mean, I guess what I'm trying to say is that since we are lacking the time traded It's been trading forever. No, I'm sorry, it has not been trading forever, so that gives us a disadvantage within its time, right? So we use a smaller time frame, and we were still able to notice divergent drives very similarly, right? So the entire phase here, right, giving us a divergent drive, and also the very beginning before the 800% pump, that also gave us that information. So it gave us probabilities again, and they both succeeded just the way they're succeeding in the current phase. So if you have a set of people that believe, psychologically speaking, if you have a set of people here that believe that there could be upside continuation, then it might actually do it through the means of one metric being divergent drives, through the means of the other metric being the psychological tops and breakouts from short or longer term formations. Other people testing volatility and momentum, and that has probabilities towards an upside too. There are so many different things that could be valid for an upside. And then when you collect them all, right, you collect them all together as one trader, you're then looking at yourself like, holy crap. I think I know everything this asset is going to do for like the next 2 months with some probabilities, right? Of course, we got to try to express discretion here. But I would rather know things like that. You know what I mean? I would absolutely like to know things like that. And I will fight for it. And other than that, team, look at this 6-month time frame here, cup and handle breakout starting to happen, a little bit of a pullback there, but this would imply a continuation towards the upside into the that's $31 confluent to the 2 spot 618. And the bull flag, which is done through the monthly time, annual time, that bull flag here gives you a target of about 3 spot 272 at about $100, so $98, and that's really not it. There are other formations here that could lead towards deeper upsides, but my job is not to determine what those are. My job here is to determine what price action would do in the immediate short term, and that's what I do. That's how I trade. All right, team. So yeah, I think XRP is an excellent. It's an excellent chart because it shows and displays literally 95 to 99% of what we've studied. And there was another thing too that I kind of noticed here. I didn't have anyone kind of tell me about this, right? But I guess I can, hold on. Let me see if I could use that. It's just the correlation coefficient, right? We already looked at it one time. The correlation coefficient displays that whenever there has been a decoupling from XRP and BTC, it's due to consolidation. So due to flat price action. So that has an average too. It's a very small one because there's only been 3 iterations on it, but it still would give us some data. So that's one thing there. And yeah. So the more tools you gather, I guess the better your odds are. But still, at the end of the day, you're absolutely not gonna fucking say that it is or it isn't gonna do something here. It's just not part of how. That's just not how the trade works, team. It really is not. Okay, so I want you to be immaculately careful when it is about betting on crypto coins, specifically the smaller ones. Okay, just be very, very, very cautious, right? So proceed with caution, but I am still seeing a continuation, even still. All right, guys. So I think psychology within the trade has so many different people that believe different things. Man, the people that believe the people that believe that this whatever catalyst is going to create an immediate short-term move when it might actually not will long the ticker. The people that are noticing volatility signals and likely to make some type of large move would also buy in, right? There are several ways, and you collect all these people, and then that creates a pump. Everyone buying based on a similar interest, and that's I believe it's powerful. It's absolutely powerful and something that we should always consider. So okay. So just know, team, that psychology here, it means a lot deeper than what we perceive it to be. We need to make sure that we can understand how psychology works within price, how we work when price is on. There's an infinite amount of variables here, and then how do we price it in? How do we price in that the incoming volatility, right? So that's where historical data comes in. Okay, now psychology, team, I know it's going to feel like it's going to be the most boring thing in the world, but you will eventually have to track who you are as a participant and track who you are against against the participants in the market, which is going to display to you something completely new that you likely didn't know of. And I often get a reaction like, oh well, but you know what I'm trying to say, man. I'm not trying to offend anyone, and I feel so weird continuing to say those things. I really don't want to offend anyone, man, and that really is my promise here. But I want to make sure that I can give you guys the best information I can, right, team? So and I also try to touch on a slightly different topic in this lecture because of the extensive XRP. The extensive XRP analysis that we did the last time. I mean, it was just huge, right? And I think that the RSI. You know what? I may have just one quick little thing because I don't think I noticed this. I don't think I noticed this the other time, but I can give you here some interesting information. What is that? And why is my ARCa sign not popping up? Let's see. Am I just... Okay, there it is. Okay, so I'm going to display to you something interesting. But I think I need it in another time frame. Hold on. I'm gonna get this up and I'm gonna go ahead and put that there. Okay. Let me see the weekly. Oh, it's that. Wow. Okay. Yeah, so look at... Actually, I think it could be... Oh my goodness, they're so just close to each other. I took out all the drawings, huh? Okay. Yeah, from this point here, I'm going to point this out. This pivot led to an upside, right? And that also rhymes with our current pivot here. And it looked like the original pivot. We were below the moving average and we had to cross above it. And man, yeah, that shows That shows a great deal of information here. Bouncing from this point to this point here led to this. Yeah, it led to that massive green right there. This here. So historically speaking, we have used this here for some pretty interesting bounces. Right here's another one. And look at that upside. Now it may not look look like much, but it could be a lot. Yeah, that measured about 181% to the upside using that same area that we're bouncing from. So if it historically shows, look at this right here and look at this right here. So if it historically shows validity, oh my goodness, man, we know where things are going here on a weekly time frame as far as the RSI now. See what I mean by collecting data? That's about as simple as I can make it here. All we do is collect the data. Okay, team. So I encourage you. You know what? I noticed that I didn't put up the other course into the weekly schedule, the lecture. Sorry. So I'm gonna go ahead and put that lecture up just right after this, and everything will be good. So, team, please remember, for those of you that haven't signed up just yet, make sure to get your butts into the strategies mentorship that is coming in. Right, we're headed towards. Man, we're headed towards one more week here, guys. We are probably 2 weeks away from starting. So yeah, we have our last week coming up, and yeah, I want you to continue with me. So make sure to reach out, and we'll be good to go. All right, team. Class is dismissed. Please go ahead and put down any questions you may have for me, and we will be good to go. 6 months Stoke is interesting. First time about to break the wow. Okay. Yeah, notice those things. Because like GME, was it GME? No. XRP. I think it was XRP. On the monthly time frame, check this out. This is the monthly time frame on XRP, which is displaying to you a very rare thing here. It's had some of the most contraction it has ever had in its entire trading history. In fact, the moving average and the volatility components have never successfully dropped below that 15% the entire time it's been traded. So how will this affect your schedule with executions and the beginner's course as well? So the beginner's course is going to be set to a different time. We're going to go ahead and add another 2 days, or potentially add two lectures on a weekend and different days on a weekday. But yeah, the executions course is going to continue at the same time, and the strategies course, which you guys will be part of, will continue at this exact same time. For both the days, for the Wednesday and Sundays and Wednesdays. The mentorship for the beginners, that there's going to be something else there. I guess we'll figure that out. Yeah, we were just definitely going to stick like this. Does the MSTR look okay? The hell are you talking about, dude? Oh my goodness. Yeah, so keep them coming, team, and please remember that you would still get in contact with me at the exact same place that you purchased, your original master's course. So right up in here, ARCa Master's Course at Gmail, team. Let's get this done. Money just walked in. Fucking love that show, bro. Love it so much. I recommend it to anybody, everyone actually. All right. So team, I just got news. Oh my goodness. What was that? Hold on, James. Oh, hold on, guys. Team, hold on, hold on. Oh my goodness. Okay, team. Yeah, sorry about that. It's just getting a little critical here. With I am completely alone. I am completely alone with my son for the rest of the week. um, I just got an email from. No. I'm with my son for like with him now. No help. No help at all. I I mean, I love my son and I love being with him, right? But usually I get a little bit of a break, at around this time now, but I will have to put him down to sleep, and everything, everything would kind of land on me. But I just received an email from Take Profit Trader, and they are saying that Thursday and Friday the markets are open for half days. So that would be closing the markets by 9 a. I'm sorry, Central Time, 12 p.m. Yes. So no, equities. Equities apparently are traded tomorrow till. Dude, we should double check that. I got an email from Take Profit Trader. I don't know, buddy. I know, but dude, I'm like literally just reading the email right here. Look, I'll read it. It's saying Thanksgiving hours. Traders, just a quick reminder. This was at 7 this morning. Just a quick reminder that Thanksgiving being tomorrow, the market will close early tomorrow at 12 p.m. Central Time. There will also be no live support as our team is off for the holiday. The market will reopen back up to like normal on Thursday evening at 5 p.m. Central Time. And our live support team will be online at the time as well, up until market close again on Friday at 12:15 p.m. Central Time. Ripe is saying, I got an email from them too with another way to clarify some of their rules. No, they're saying 12 p.m. Central Time, p.m. So that would be 10 a.m. 10 a.m. Pacific Time, 1 p.m. Eastern. But apparently there are half days traded both tomorrow and Friday. I feel like I shouldn't. Let's see. U.S. stock and bonds market will be closed on Thanksgiving and will have shortened hours on Black Friday. Stock markets will stop trading at 1 p.m. Eastern on Friday. Where is this from? From Market Watch? Shit, dude. Why are we getting...
The stock market's closed tomorrow. I know they might have been trying to make you happy. Saying they were going to send an email to this ARCa guy and let him know the stock market's going to be open tomorrow, so we know he's going to trade.
Just me, fool?
Yeah,
You should probably check your email. You have it too.
I do, but it's not open tomorrow. I don't know what they're talking about. Maybe the futures market's open? There's no way the stock market's open tomorrow.
Yeah, I'm trading futures right now.
That's crazy.
And you know, the opening of that day is hours ago, and it's going to close tomorrow by my time, 2 p.m. Pacific. Or what, 1 p.m. Pacific or whatever. What is it, 2 to 3, I think it is? It was just a 1 hour close. Let's see. Webull teams, in observance of Thanksgiving, all major U.S. trading markets will be closed on Thursday, November 28th. Please review. Damn, dude, somebody should probably tell something to take profit. Trades involving equities, options, or fixed income executed on this day will be settled on. Wait. Well, okay, that's going to be okay. All markets will be closed for Thanksgiving. The overnight trading session will reopen at 8 p.m. Eastern Time.
Yeah, so the 24-hour market, rather than follow the same.
So Friday is a half day. Yeah.
It will be like a Sunday night.
And it's saying that Friday that would be a half day.
Yeah, it's a half day.
Dude, that is.
That's why I went with these options. So you paid a premium. You were scaring me then when you said market would open.
Yeah, dude. They sent that email out at 7:25 this morning.
They must have worded it wrong or something. I don't know. You want to place a bet? I'll bet you 50 grand right now.
What? I do not have 50 grand, bro. What? Yeah, it's just that's what I thought. That's what I thought that everything was gonna do. And until fucking Take Profit Trader just sent out this email saying that it's gonna be 2 shortened days, and then noticing that futures is open right now. So that's heavily confusing. You know. I mean, whatever, brother. It doesn't matter to me, man. I'll trade wherever. I just don't want to not, what if we're, like, I don't want to not be there. Yeah. Oh, dude. Yeah, that really sucks, man. Where, dude? This? Yeah, on a monthly, dude. Yeah, and then oh my goodness, and then stochastic momentum against the volatility. Look at that, dude. And monthly is closing in 2 days with a huge green candle. Wow. Yeah, dude.
No, ARCa, the email says the market. I agree with the email from them. It came in at like 8:48 my time, so it's like 7:48 Northern time. Is that the one you're talking about?
I think so. And it says, and our live support team will be online at the same time as well, up until the early market close again on Friday at 12:15 p.m. Central Time, which is not the same time.
There will also be no live support as our team will be off for the holiday. The market will then open back up like normal Thursday evening at 5 p.m. Central.
Yeah, so the market will close early tomorrow at 12 p.m. Central. Above that.
I do see what they said.
What? They're confused.
Yeah. I had this close early Friday.
I'm going to reply and say,
What do you mean, man? I mean, are you watching this rally video? Dude's a smart guy, I'll have to say that. He breaks down these companies about this. I mean, sure you'll be pissed off, if it just continues to moon and rocket. There's no re-entry, but taking your profits and securing something is better than not, and you can reposition later, or you keep what you have and you do the options. So I think there's going to be a Santa rally, but I'm really hoping MSTR, just as long as MSTR does not go over 525 by December 6th, I'm happy. If it goes over 525, I am royally proud.
Because they're naked puts.
Because of naked, selling naked calls.
Oh, they're selling the naked calls, yeah. Oh yeah. Oh my God, dude.
I'll get destroyed. The whole account will blow up.
Oh, dude.
So, I think it's going to take a lot of buying pressure to bring it all the way back up to the levels right before the Citron short.
The
Shorted it that morning because the pre-market was going wild.
right.
Do with Gary Cardone's call, telling everyone that we're in a gamma squeeze with MSTR. So it's a perfect time. Everybody started buying as soon as the market opened up in pre-market. I think it'll go back up, though, for sure, after Trump gets like higher than 565 or whatever it was.
Mm-hmm.
What's interesting about him, Smoke, is he called the ARCa science trials to fail. And he told everyone that night to short it. You can short it. You have interactive
brokers short it, and the next morning it went from $23 to $3.
Wow.
He made a few million.
Yeah,
I don't know how.
he's a smart motherfucker. He's been doing this since he was like 16, right?
Yeah, I mean, he used to work with Jim Cramer for a while. He started his own hedge fund, went to jail. He's out of jail now. He has his
I
own.
remember he went to jail because he had that pharma company shot it, fucking racked up the prices.
Right. Yeah. He has his own software company. He's making an AI doctor bot right now, like an artificial intelligence doctor. And he's
Baymax.
back doing his trades. He was banned from trading any type of pharmaceutical companies for many years.
Wow.
It must have recently got lifted.
Wild.
Interesting.
Yeah, I mean, he's
well.
the one that called Tesla. He said Tesla's way undervalued at 100 when it was 100. And he broke down the same math that he's doing right now. He broke it down. Now, he did, in all fairness, he did say Rocket Lab's true value is 32. Said that too as well today when he did his financials that he does with his spreadsheets.
We've been hearing a lot about $20.
Huh?
We've been hearing a lot about $20.
Yeah, one good trade was in there talking shit today.
What was he saying?